A quick note, it might look a little bit laggy. That's for a couple of reasons just before we get started. My computer is very, very hot today. It's quite a humid day where I am, and obviously recording and streaming at the same time. So it's a little bit much for my little Mac these days, but either way, hopefully it's watchable. So we've got a couple of things to talk about today. Obviously, we've got our very normal watch list that we will go through shortly. But just a quick side note, really, from the book of James before we get started. And there's the side note that I want you to take away today before we get started is you need to have confidence in your ideas. Now, of course, we've been speaking about the dollar. Some of you may have seen I've already flexed a little bit, a little bit of my ego stroked today with the dollar being praised really in ING's bank reports, bearing in mind 60%, institutions were 60% short over the past 1, 2, 3 weeks. Now finally they're catching up, and we've been calling this, or I have been calling this for a long time. However, that's not actually what I'm talking about, really. This is what I'm talking about on New Zealand yen. And the reason I'm bringing this up is because it's important to understand what news is relevant and what is worth paying attention to and how to react to those types of things. So this is New Zealand yen. Obviously, we do have a long position on New Zealand yen. That's in the President's Trade Ideas. So we had the news that Trump wanted to fire Powell, or the headline was something very, very similar to that. It was along the lines of, Trump wants to get rid of Powell. Markets freaked out. We saw gold spike. We saw yen. It was a rush to safe havens. Very, very typical market move, and very typical stupid retard investor moves, if that makes sense. Excuse my language, but I'm getting very sick of dealing with smart money at the moment because they just don't seem to quite get what's going on in the markets. And I know that might sound very egotistical, but if you actually understand, and this is what I'm talking about, why I bought into a dumping market, it's because it's very obvious, and it's not even economics really, this is just law, that the president can't fire Jay Powell. That it's a separate entity, it's independent, it's private. The president has nothing to do with the Fed. He cannot fire Jay Powell. So during this time, I was sat thinking, what the hell is going on? Why are the markets freaking out? Because even if Trump said he was going to fire him, he can't. That would be a massive, massive legal problem. And that would break a lot of sort of the systems that are in place for the US in terms of its independence and the separate parts of the US in terms of like the legal entities and that type of thing. Anyway, so it's about having the confidence to put money where your ideas are. I could have been very wrong. However, I wasn't putting a lot of size into this, but it paid me quite nicely. I made about 2% roughly off this. So that's what I want you to take away. If the markets are moving and you understand that what's going on maybe isn't a true reflection, there is no harm putting money on your idea. Obviously, size it with caution. I'm not saying if you're super bearish on the dollar and you see it going up, I'm not saying you put 100% risk on that idea. But if you aren't willing to put money where your brain is, then what's the point of trading? And a lot of retail at the moment have been completely wiped out of the markets because of all sorts of stuff that's going on. Obviously, we've had the Fed rate cut spiral. That a lot of social media gurus were talking about, the Fed's cutting rates, blah blah blah. There's tariff wars, blah blah blah. Retail's jumping too late. Now they've been caught in this upside. I mean, it's very, very small relative to the weekly time frame here, but it's obviously on a day trade, an intraday trade, a short-term swing trade. This is still quite a large move. Same thing with the Powell and Trump situation. I have absolutely no doubt that many people will have lost money during that move because they don't really understand what's going on. So that's sort of the side topic for today. But anyway, let's move on. Like I said, I know that probably came off a little bit egotistical. That is not my intention. It was purely to try and visualize and explain how important it is to have a bit of nuts in this game. So let's. I've actually not really thought about the structure of this webinar, but let's just sort of make our way through. Let's start here. So, for anyone that missed it, again, I did put this in the Discord. I'm not going to read this full report, don't worry. But essentially, feedback, and this is from Credit Agricole, very, very reputable. You can see here they've got very good ratings from Bloomberg in terms of their analyst scores. So they're very reputable. It's worth paying attention to what they say. So feedback from recent meetings with European clients has highlighted that investors and corporates have grown increasingly worried about the impact of the recent euro strength on the Eurozone's economic outlook. So again, I'm not going to read this full thing. It is in Bank Report's channel if you want to go and look at it exactly. So that is one of those extra layers. Again, I was pretty bearish on euro dollar leading into sort of the past couple of weeks. So that's a nice little confluence that we've got that maybe we can get into something here. So I know this chart probably looks a little bit messy, but let me just explain quickly what's marked up here. Obviously, we've got our daily daily 200 Bollinger Bands here that generally can help with sort of a risk on, overbought or oversold market conditions. So we have been pushing that up consistently for the past couple of weeks, telling me that we might be running out of steam. Obviously, this is not discussing the economic side of it. But if we also look at the behavior of the euro dollar, when we do have upside, we very typically follow the same pattern. You can go back and look this at previous history. I've just done the previous two because I was a bit strapped for time. But you can see obviously we have the initial run, very typical upside move. Then we have consolidation, then the dump to the downside. Upside move, consolidation, move to the downside. Now we've got the upside move. I am expecting some sort of consolidation or even some sort of double top and then some more downside move to come. Whether I'm not fully expecting us to come down to 1.05. I think that's a little bit overly optimistic, to be quite honest. But this is just how the trade's marked up for now. So euro dollar is seeming primed for more downside, as I am still bullish on the US dollar. The Fed is in no position to cut rates as far as I am concerned. And again, that is also echoed here in the ING report that we have sent in the bank reports, and also again in the US dollar focus channel in the analyst updates. So essentially, again, I'm not going to read all of it, but in a nutshell is that the US is actually currently giving us quite strong data, which puts the Fed in a position where they can't really cut rates because we've had hotter CPI, we've had hotter jolts, NFP, low unemployment. So the labour market's fine, inflation's still sticky. We've had the tariffs held off until August the 1st. So the impact or the full impacts of tariffs still aren't fully recognized or understood. So how can the Fed cut? Anyone telling you the Fed's going to cut rates in July is quite simply a bit of a fool. The only thing that could rebuttal that is one of the Fed members, which is, I think it's Waller. Let me just double check here. It does say, yeah. So Fed Governor Waller advocates for a July rate cut amid slowing labour market and transitory tariff inflation. Markets price 70% chance of a September cut with political pressure rising. I honestly, to put it quite frankly, I don't give a shit what Waller says. I will not expect a rate cut in July. I could be wrong, obviously anything can happen, but I'm going to stand on business there and just say I really do not think that's going to happen. I would be very, very surprised. Maybe in September. September is completely still on the table, but for now, July, in my view, is not going to happen. Obviously, be prepared. Again, I'm not saying it could never happen, but in my view, I just don't think it's the right time. Swiss yen. So the Swiss yen, in fact, all of the yen pairs have been having a very, very good period. Mehdi, I do see a message. I'll take a look at that in a second. I'm just going to finish this thought, and then I'll move on and have a read your message. So Swiss yen and all of the other yen pairs have been running very, very well over the past couple of weeks. Now, as some of you may know, I was actually very bullish on the yen at the start of this year. And that's something, I just praised myself on the dollar and euro dollar. I'm willing to hold my hands up on this one and say I was completely wrong on the yen. I got this really, really badly wrong. Not in terms of, I didn't take a massive loss or anything, but I was sort of very short during this period here when we're having this sort of daily consolidation around sort of March, April period. That obviously did not work out. So hold my hands up there. we do have a report. Is it this one? Yeah, here we go. Japan rate hike impossible under slowing growth. Again, not going to read all of it. Feel free to do it on your own. But essentially, the idea that I had was very, very reliant or entirely reliant on the Bank of Japan hiking rates back to normalization. Because as you should know, Bank of Japan has been, previously had negative interest rates, and they came out of negative interest rates on that path to normalization. Now, that was my big focus. I was very bullish on the yen during that period, as I was also expecting that to unwind carry trades as that, what would we call this? The swaps, as the swaps start to become less attractive to hold yen shorts. However, again, that's not quite happened. So for now, until further notice, or until we do get the Bank of Japan start to signal a little bit more hawkishness, I am starting to be quite bearish on the yen, and looking to go long on yen pairs. So Swiss yen is obviously a no-brainer, and we've got the same thing for all of the yen pairs. We are already long on New Zealand yen. Again, this was sent to the signals channel, so if you remember, you should have seen this if you're not already in it. Dollar yen, similar idea here, expecting dollar strength. We're expecting yen weakness to continue for the short, I'm going to say short to medium term, at least until tariffs are done and over. Once tariffs are done, then maybe we could start focusing again back on the on Bank of Japan hikes. But for now, it's just a no-go. Australian dollar yen as well, I think could be a very, very strong play. So let me just have a quick look at my notes to make sure I'm not missing anything. So the reasoning I've got behind Aussie yen exactly is a pure carry trade and macro divergence trade. The RBA remains firm due to sticky inflation and strong labour market data. Meanwhile, the Bank of Japan is done tightening with slowing inflation and political instability, likely triggering a small stimulus. Likely triggering more stimulus. I've got that Sunday brain today. In a risk-on environment, JPY funding short, AUD benefits from yield and China's commodity demand recovery. So obviously we are in a risk-on market. Gold is completely consolidating. We are seeing risk assets perform very nicely, hence New Zealand dollar, Australian dollar, US dollar even is doing quite well at the moment as well. So that's yen pairs covered. I would be quite happy to go long on pretty much all of the yen pairs. Euro CAD is the next one. Let me just pull up the Edge Finder as well. Forgot to do that for today. So we do have some pretty good options actually at the moment. So we do have EuroCAD down here. Nothing overly impressive. It's got a bullish score of 5. So it's on the watch list, but it's not one that I'm overly invested in getting into. I am sort of leaning bullish towards oil as well. So obviously if we do get a strong oil, strong CAD, EuroCAD long, probably not the best idea. However, it could be a nice hedge if we end up going long oil and long EuroCAD. We could at least then sort of hedge our risk a little bit. If we do see a relatively healthy pullback, sort of down towards the, let's just say 1.59 just for ease. 1.59 would be possibly the entry area I would start to take a stab. Oil seems fitting, we move on to that. So again, let me just pull up the Edge Finder for you to see, because oil's got a very, very good reading actually at the moment. Top setups here. Tell you what, in the meantime, let me just have a quick read of Mehdi's message. Had some difficulties last week with data outcome, which would normally confirm market direction. Ended up moving the other way. Now I'm asking myself if the reaction was already priced in, or if I entered too quickly. For example, US CPI came in lower. I was expecting a dovish Fed speech with more rate cuts, but the USD strengthened significantly. Yeah, Mehdi, this is the thing. A lot of the US dollar weakness has already been priced in. So during this period, it was a case of investors, for a lack of better terms, excuse my French, they shit their pants. Because again, what did we have? Well, we had a weak labour market, we had cooling inflation, we had trade wars or trade uncertainty, and there was a lot of talk about recession and de-dollarization. It was the worst doomer talk you could really have gotten for the dollar. So it was sell dollars, or at least hedge against dollars, and that was maxed out really. Again, we got to almost 60% short on dollar. Any more weakness couldn't really have done that much. Yes, it could have, ended up slowly leading us sort of down towards 90 potentially. But it was more of a case of, because people were so pessimistic on the dollar, the good news outperformed. So let's say, for example, we were back down to this weekly point. Let's say we got another poor data print for the US dollar. Cool, maybe it would have been more like something like this, where we end up consolidating with a downward drift. Whereas what we've got is good data, and we've seen short sellers get a little bit squeezed, repositioning, reallocating, and more optimism around the US. So if that makes sense, hopefully that makes sense. But yeah, I mean, I wouldn't focus overly too much. But yeah, it's just a case of putting context behind the data. Okay, so where did I get to? We were talking about oil. Where's the edge finally gone? I've got two. Again, sorry, I know it's a little bit laggy. It might be a bit frustrating to watch, but unfortunately there's nothing I can do about that right now. So, oil, load. There we go. So we do have a pretty nice seasonality on oil. 1.11, healthy, actually very, very good seasonality. COT, so smart money, remains long, although they have reduced some of their positions, but overall it is still bullish. Retail seems to be long, actually. Why is that getting... That doesn't seem right, actually. Retail should be -1 if they are majority long. Should be -1 if they're majority long. So I'm actually going to skip over retail for now, because I don't know if that's a bug or something's gone wrong. Anyway, seasonality, trend is bearish. Obviously, oil's had a pretty tragic period over the past few months, really. Manufacturing PMI is positive. Retail sales, inflation, blah, blah, blah. So the current macro landscape is looking pretty strong for oil right now. We do have, again, I'm just going to reference notes just so I can make sure I'm covering all the topics I want to cover. Diesel and refined fuel markets are tight. Inventories are falling, and geopolitical tensions, OPEC, remain US economic strength sustains demand. Market structure confirms bullish bias. In terms of what I mean by that, although we have seen a relatively bearish trend overall, the short-term price action does suggest we are starting to see some buyers come back into the markets with this short-term trend to the upside. So key drivers are falling inventories in the US. So obviously if we have falling inventories, it means there's less supply, increase in demand, so that can be a bullish factor for oil. Summer demand and shipping constraints. We've got Saudi and OPEC production control, and resilient US economic data. So we'll see how this goes. I think we could catch something relatively quite nice on oil, but it's not a market that I'm overly familiar with. I typically stick to G7 and G10 currencies. So oil may have to take a little bit of a backseat while I do a bit more digging, but it is on the watch list. Gold. I'm actually willing to take a contrarian position here on gold because I am bullish on the dollar. I am not willing to take a long on gold just yet because we've had, I get asked this pretty much every day. So for those of you who don't know, I go on Trader Nick's stream probably 2 or 3 times a week, and we always cover gold. And it's, buy or sell gold. I'm buying gold. Why, are you looking to buy gold? No, I'm not looking to buy gold. And the reason is very simple. So over the past years, gold has had numerous reasons for rising. So let's start from COVID. So we've had COVID, we had Russia-Ukraine, we've had Middle East tensions, we've had election fears, we've had Fed rate cut concerns, economic uncertainty. We've had so many things going on, and it's just given gold the perfect time and the perfect period really to just continue climbing higher. But what is there now really? Let's look at it objectively. How many things are really that bad? And when I say that bad, I mean things that aren't already priced in. So Russia-Ukraine, yes, it's still ongoing, but there's no escalations. That's already priced in. The Middle East, I'll be honest, I've not heard about the Middle East in a long time. So again, I don't think there's any escalations there priced in. Election fears are done. COVID's over. The Fed's not cutting rates in July. Again, as far as I am willing to say, they're not going to cut in July, maybe September, but that's sort of 50-50 right now. Elections are done, as I said. Tariffs are kind of taking a back seat. They're paused back until August the 1st now. So really, what is there to support gold? Well, in my view, there's not really anything. And the fact that we are ranging is telling me that the markets don't have a reason to buy gold right now. So they're waiting. It's not a case of gold's super bearish, but it's also definitely not bullish. And the last thing I'm going to say here, because again, people bring this up to me pretty much every day, and it's just not a valid reason to buy gold in my view for a retail trader. So the argument I see is, James, buy gold. Smart money, sorry, not smart money. Central banks are still buying gold. Okay, great. So let's put that idea to the test. So I'm not saying they're not, because they are, but as a retail trader, let's say, oh, let's buy the dip on gold here. Bearing in mind this is a daily chart. Most retails are sat sort of 15-minute to H4 range. So let's say they buy the dip because central banks are buying. Oh well, you just got liquidated. Same thing here. Throughout all of this range, you could have said, oh, I'm buying wherever I'm buying because central banks are buying. That's such a stupid idea. Just, it helps. It's like a cherry on the top of an idea. Let's say there was so many other things going on. We've got a real macro thesis on gold. That's perfect. And then the final layer, central banks are still buying. It's a supportive factor. Great. But you cannot use that as a sole reason to buy gold. It's a bit of a ridiculous thing. I understand why people say it, because they have the idea a central bank buys gold and it flies. So, they buy here and you position perfectly. That's not how it works, unfortunately. I wish it was, but again, for retail traders to use that as a long gold idea, it's not valid. Unless you are going for a position trader, you're investing in physical gold or whatever it may be, long-term holdings, fine. But again, for short-term speculative trading, it's not even worth thinking about. Next thing is the dollar ZAR. Now again, the ZAR isn't something I really pay any attention to because it's not an asset that I really care about. However, it does have a bullish reading, so it's something I'm going to do a bit more of a research into. So let's just pull up the data. I think I've got some notes as well on dollar ZAR. Let me just double check. Yes, I do. So thesis: South Africa is suffering from high unemployment, weak GDP, and fragile sentiment. Inflation remains a problem. The rand is vulnerable to global risk sentiment. The Fed is staying firm, and higher US yields are keeping the ZAR pressured. So the key drivers: 92% unemployment in South Africa. Inflation is sticky. Growth is stagnant. The Fed is holding rates, and risk aversion hurts emerging FX. So the landscape is very positive, not just from sort of the macro view, but the current fundamentals are also very supportive, as you can see on the edge finder there. The technicals, however, present a bit more of an issue because it's a range bound market right now, but it's not a clean range. So yes, we are essentially just ping-ponging up and down, but we're not making like a consistent support or a consistent low to make it to make it very, very clear to buy from. So I've got 3 ideas in mind. So what I'm looking to do is either buy at current price on Monday if we can see buyers start to step in and we can see some sort of rejection of these lows here. If not, maybe a 50% level of this current sort of support area, and then worst case, or if we really don't get anything until here, that's also fine, because this would be the bottom of the Bollinger, and this also would be a slight line of previous support. So again, 3 areas that I could possibly enter, all relatively close to each other, but I just need to see sort of price developments into the early side of next week. Copper, so I'm not going to go too much into copper because I also want to buy silver, and they both fall into pretty much the same idea. So I'm actually going to do a bit of a research paper on copper and silver, probably just silver actually, because again, copper's not my thing. I don't really do anything with copper, but it did pique my interest on the technicals. So I'll send out a bit of research or a research paper on silver, probably Monday or Tuesday this week coming. But anyway, the technicals are pretty much one-to-one with copper and silver. So I'm just going to go over copper's technicals because it can be applied directly to silver. So we do have this sort of previous high that hasn't been tested. And again, if you look at silver as well, we've had very, very strong buying momentum into into new all-time highs. Now, obviously, copper's slightly different in the terms that this wasn't just buying pressure. This was driven by tariffs. There was that 50% tariff on copper by Trump. So that also is a little bit of a factor to keep in mind. So essentially looking for a comeback down into the recent highs around, what level is this? Around 5.1, and then looking to start taking it higher from there. I'm fairly sure copper is on the edge finder. Yeah, we do have a bullish score of 6. So again, that's just something we can layer on top of that idea. So if we do get the pullback, I'd be quite happy to be a buyer at that price. So the last two I want to look at are pound New Zealand and pound dollar. We'll start with pound New Zealand. So I did send this actually for free. So if there is anyone in here that is just floor access, so the free members that can only see our analysis, you also had a chance to get in this. So I know that some of our members did. I know I think there's 1 or 2 of you, maybe a few more, that are in 1 to 1.5% profit roughly. Because I think I sent my analysis out and I was looking for an entry around here, but I had an alert that didn't get triggered. So I totally missed the idea, unfortunately. However, we are still in this sideways trend, or the sideways range, I should say. So the idea is not gone just yet. So I am looking for a retest back into the same high that I was initially looking at, and then I'll be looking to go short into this. So the pound has been very, very weak. I think we could start to see some strength come back into the pound. However, that's very, very speculative. I don't really have anything to back that up just yet. But again, if we just reference the edge finder, trust the edge finder, you can see here we do have a very bearish reading on pound New Zealand, and that just helps back the idea up. So the theory I've got really is very similar to gold. So do you remember what I said about we had the massive run to the upside? Then it seems like the markets are just waiting because it's run out of reasons for it to continue catching a bid. So we could see, if we get some reason for this market to start pulling back, we could see a reversion of a lot of this buying that we saw on the left side. Lastly is the pound dollar. So the pound dollar again is one that I've been very, very interested in. And I think a few members managed to catch this one as well. While again, I was sort of sat back, unfortunately. However, I think any pullback, I'll be looking to sell. The technicals on this are very, very straightforward. I think we got to a point where the dollar was very oversold, and obviously hand in hand, we get very overbought euro dollar, very overbought pound dollar, even the other dollar crosses. So pound dollar, I think, would be due for maybe not a reversal. I'm not as bearish on pound dollar as I am on euro dollar, but I think we could definitely get something going here. So in this market, the idea wouldn't be to really even have a take profit. This would be sell and then just trail stops at the previous highs and just let it run. So that's pretty much the flow for this week. So I think we've got quite a lot actually in store. It's just now a case of waiting for the pullbacks or some sort of reaction, like the gold short could maybe happen. Again, I'm not overly leaning either way. If we do manage to get an entry short, I will take it. However, I also want to be very clear. If we do get any negative news for the dollar, I will be starting to buy gold. Again, because this range is telling me the markets are waiting. So anything either way could lead to the trend beginning or a new trend developing. So do keep that in mind. Australian US dollar. I was looking to go short. I think I still am, but I don't have anything that's overly piqued my interest. I think the main thing I'd want to play here is the central banks. So we've got the RBA maintains a cautious stance, potential rate cuts ahead amidst rising unemployment and easing inflation pressures. So shorts do make a lot of sense. Again, as I already said, or as I just mentioned on pound dollar, I think the dollar crosses are due for a pullback, if not a change of trend. So on the pound US, on the Aussie and US dollar here, I'd be quite happy to look for a very, very simple 1 to 2. You could, if you were very, very convinced on this market going lower, you could even look for a much lower target back into sort of the... Again, it sort of really depends on where your idea goes to, but sort of 0.61 could potentially happen. But the only way I see this happening is if we get the dollar to really change trends and continue that decade-long trend that it's in. So if we get this true expansion and we start seeing the dollar come back up towards 109, 109 to 110, yes, maybe so. But yeah, on paper, I do like it. The long-term outlook does remain heavily dependent on the Fed and US data. Anything on Euro Pound, New Zealand CAD, Aussie, New Zealand. Aussie, New Zealand, no. I'm completely flat Aussie, New Zealand, so I'll just put that one out there. New Zealand CAD, also, I'm kind of 50-50 because of oil. I'm short-term unsure on oil. I really need to do some more research. However, I would really like to see it start to gain some strength. So it does put me a little bit more bullish on the CAD side. But again, I don't really have much research to be overly bullish on CAD just yet. So I will add oil onto the research paper list, and I'll send some specific research for oil and silver tomorrow. So New Zealand CAD, let me just have a quick look at the chart. New Zealand CAD here. Yeah, okay. So actually this does look good. And it does line up with what I just said about CAD maybe gaining some strength. Obviously we're seeing the New Zealand CAD down. So 200 daily moving average is right here. Really nice daily candle formation. So to be honest, maybe you could catch something like this. Maybe just a slightly higher stop there. Could go for a 1 to 2 just back into the previous low. I think that might be a good play, actually, I'll be honest. But again, I would urge you to go and do some research, because I'll be honest, New Zealand CAD, it's not a market I really frequently pay any attention to. Euro Pound, yes. So again, this was sent into the free analyst research side, or channel I should say. I'm still bearish. I'm still happy to hold on. Oh wait, hold on. Have I changed? Yeah, I changed views. I need to go back to the daily here. So I'm still very happy to sit bearish. However, this isn't really a macro play. Although you could make the argument that, again, as we just mentioned on the Credit Agricole report, that the euro is overvalued. It's a bit too expensive. So that could be a little indicator, especially if we do have the dollar starting to gain some strength. We often see the euro move inversely. So if we just look here, when did the dollar really peak? So let's say it was the 13th of January. When did the euro peak in terms of low? Well, it was the 13th of January. Now look, where's the euro seeming to top? The 30th of June. Same thing here on the dollar. 30th of June seems to be the bottom. So if we do start seeing the dollar start to rally into this expansion zone, then we could expect euro to weaken. So yeah, I'm still happy. Mean reversion position. We do actually have a long signal on here by our other trader. So whichever one you take, if you want to join me in a dollar cost average mean reversion, feel free to do so. But what you need to be aware of, I've taken very low risk on these trades. So if I do cut my losses here, it's roughly a 1.5% loss. So it's really no problem. And the benefit to being short like this is I'm paid swaps. So for anyone that doesn't know what that means, is if you look on a trade, any trade you take, specifically on a FX pair, you will either get paid swaps or you will pay swaps. And that's essentially just down to the interest rates of the currencies. I'm not going to go into what swaps are and all that type of thing, but on Euro Pound you get paid swaps, so you earn money for selling this market. So that's why I'm really happy to just sit, because although yes, I'm in some drawdown, I'm actually making money, so that, you know, it's fine. But again, if you are bullish and you want more of a speculative short-term trade, go and follow the signal. So that's my view on those. Again, Euro Pound definitely has potential for more upside, but long term I am still bearish. Sonics, I am again accumulating DCA dollar yen longs like last year. Oh, Sonics, I love that, man. For anyone that isn't a frequent member or doesn't check the chat, Sonics has a very aggressive, very cool way of trading. I've never seen someone trade the way he does. It's very similar to my DCA strategy, but I'll be honest, I think he performs better than I do. It's crazy. So credit to you. I'm long oil since previous pivot low. Long New Zealand CAD. I'm DCA stacking shorts, Euro Pound, hedging with longs as well. Very nice. Keeps cool. Still here. Edge band indicates bullish. I'm also hedging shorts. Perfect. Sonic's places trades with a vibrator. yeah, maybe so. Okay, so I think that concludes my weekly analysis. Actually, just before you leave, let me show you the bank trades that we do have heading into this week. So bank trades are here. Feel free to screenshot it. I will also send them out tomorrow in the daily analysis. I don't really see much of a pattern here. We do have some dollar bulls coming to step in. You know, they are a little bit late for us, but that's fine. So we've got Refinitiv that are, that do have a buy limit on dollar yen. MUFG is also in a long on dollar yen. We've got ANZ that's short dollar CAD or sell limit. Refinitiv has a pending order on dollar yen. Normal Research is they've got a short sell limit. This may be valid actually, but I'll save this for next week's. But it does relate back to the path to normalization by the Bank of Japan. So yeah, again, feel free to screenshot it and look at that in your own time if you do wish to. Currency strength as we head into this week. As we end last week, we do have the dollar taking the lead. We have the Canadian dollar also lagging behind shortly after the dollar, but it's still the second strongest of the G7. And we do have the Australian dollar and the yen lagging really far behind as the two losing currencies of last week. And actually, really is last thing, I'm just going to quickly have a look with you at the calendar that we've got coming up. So the economic calendar. Monday, not really anything interesting on Monday. On Tuesday, we've got the RBA meeting minutes for Australia, and we've got a bank lending survey, consumer confidence, existing home sales. So we do have news next week. However, it doesn't really get very interesting until Thursday. On Thursday, we've got quite a lot of red folder news, so just pay attention. We've got services PMI, manufacturing PMI, initial jobless claims for the US, and Friday, not too much on Friday. So that's it. So we're sitting pretty tight for this week. Bank's going to start subscribing to Elite Traders soon. Yeah, well, let's hope so. I could do with the money. We'll charge them a premium rate and we'll share the profits. We might start, we might IPO with a meme coin or something. Anyway, that's going really off track. So guys, if there is any final questions, let me know. If not, then we can end it here, and we'll get into the new week together tomorrow. For anyone that is not already a member, you can get a 7-day free trial on our website. So you do not pay anything for the first 7 days. If you don't like it, you cancel. You lose nothing. You don't pay anything. But if you do like it, then you can stay. And again, it's completely free for 7 days. So feel free to join us there. Guys, enjoy your weeks. I hope you've all had a great weekend. And we'll speak very, very soon. Thank you all for joining. And thank you all for listening. It's been a pleasure.